Hi traders, welcome once again to another session. If you're new here, my name is Farida. I'm a new Forex trader. I'm going to be sharing trades I take with you on this platform. Let's hop into the chart. So I entered GBP USD trade and I'm going to share with you what I saw and how I got into my buy position. First things first, from here we can see we are on an uptrend, okay? We are on an uptrend, all these moves, higher high, higher low, higher high. So we're going to look for our most recent break of structure, which is here. This is our most recent break of structure to the upside. You label it as your break of structure. You look for the low that created this break of structure, which is this low. Then you look for your last bearish candle before they move to the upside. And what is your last bearish candle? It will be this red candle here. So I'm going to draw my zone from this red candle. However, I will just capture the whole area here to be sure and let it fall into my demand area. Okay, so this whole area here, you extend it to the right. So this area here is going to be my demand zone. So what do we look for? After drawing your breakup structure, you look for the last bearish candle, check. Make sure that liquidity is going to be swept. We have liquidity from this area here. Liquidity has swept this area here and potentially this area here. These two areas can be tagged as our liquidity zone. Okay, so now you see here, price came here, swept this liquidity area, came here, swept this liquidity area, and then finally came to our demand zone. Now when price comes into your demand zone, what you're looking for is one of two things. One is a close of candle confirmation, and two is a break of a candle confirmation. A break of a candle confirmation means that once price closes, or not even, it doesn't have to close. Break of a candle confirmation basically is so long as price breaks above the last bearish candle, you are good to enter inside. While close of a candle confirmation means that price has to close above it before you can go in. Somewhere here is a valid close of candle. Okay, think this one too is a valid close of candle. So now what you need to know to enter into this position is you have to go to the lower time frame. So I'm going to go to the 15 minutes time frame. On the 15 minutes time frame, you can see things clearer. Here you identify the last bearish candle, still within our same rule. In this case, the last bearish candle is this red candle. You can see this, okay, this one closed a bit lower. So I'll say my last bearish candle is this candle here. Okay, so now to be more conservative, it's better to wait for a close of candle. So now let's say I had waited for this close of candle. I would have entered here, my stop loss would be here, and I would target the last swing high, which extends all the way up there. Okay, let me just delete this. So what happened was, before I entered, I wanted price to break above this area here to give me further confirmation that okay, we are starting to create new higher highs in the opposite direction. So I entered here. Initially my stop loss was down here. Let me go to the higher time frame so that you can see what I'm referencing better. Okay, so initially my stop loss was down here and my take profit was all the way to this swing high. That was my initial setup. However, when I entered and price started moving further in my direction, I adjusted my stop loss to this last swing low here and waited. Now what happened was, shortly after I entered, some couple hours later, we had CPI news, and CPI news shot the market so high up into the upside. And when price shot into the upside because of CPI news, I don't like seeing price pull back so far down, so I had to exit somewhere there. Okay, I exited somewhere there, and then we had a really nice pullback the following day. I think this was on a Tuesday. We had a nice pullback within the evening of that same day, and I think I missed that entry. So I had to brace myself to enter the following day. Okay. So what did I see? This second entry I did. Now, of course, you can always wait for price to reach this high, which is perfect. However, I just did not want to be part of that serious pullback and all of that. So I rather re-strategized, looked for another entry in another place for the following day, which is this. I entered this. Let's draw a break of structure area first. This was the break of structure area. Okay, break of structure area. This was my last protective low. Now, if you are looking at it from this perspective, you should draw your last bearish candle before this break of structure, which is here. This will be your demand zone. Okay, so now let me label this break of structure. When you draw this break of structure, what are you looking for? You are waiting for price to move up before coming back to your demand zone, looking for a confirmation in this your demand zone before you take price to the upside. Like I said, during this whole move here, I missed the entry because I wasn't on the chart as at this moment. If not, this would have been a very perfect setup again to enter, but I missed it. The following day I came, I saw price had come here, taking about to go higher, and I was like, you know what? I believe price should go higher. I know I'll risk more, or I'll be risking more compared to my reward ratio, but I said no problem, let me just enter. So I entered very haphazardly. I didn't I didn't strategize the entry, but I just knew that my risk should be somewhere below here and my target should be somewhere above here and above. Shortly after I entered, price started reversing against me, but I wasn't too worried. I was just like, okay, let's just keep watching, and price shortly after started moving in my favor. Nonetheless, I had to close price not too far into my target because of I was watching we had about US news, or I was watching a counter pair of this. I think I was watching a something GBP pair or something USD pair, and they were acting funny. So I just decided to just close all my positions and let market play out. Fortunately, market played out, but I was already out of the trade by then, which I'm not too mad about. It is what it is. So those are the two trades I took on GBP USD, and they played out nicely. I'm satisfied. So basically, that's in essence smart money concept. You draw your break of structure. In this case, the upside, look for your demand zone. Wait for price to come to your demand zone and look for confirmation. So now let's imagine I had decided to enter. I was with my phone and all of that, and I decided to enter with this demand zone. What would I be looking out for? I'll be looking for the last bearish candle, last lowest bearish candle. In this case, it will be this candle. Now, I can either enter conservative or slightly aggressive, meaning I can either enter with a close of candle, which will mean I'll be entering somewhere here. I would have entered ideally on this candle. My stop loss below the demand zone. Sorry. My stop loss below the demand zone, and my target the last swing high below the demand zone, target last swing high, which is this. Okay, so that would have been a much more reasonable risk reward ratio compared to what I did, but I didn't risk too much on this particular second setup, which is why I think I was a bit chill about it. I didn't risk too much. I was like, it is what it is, let the trade play out as it wanted to. So on to the next trade, which I'll be sharing in my next video. Thank you guys for watching. Hope you learned a thing or two. Catch you all next time.